Mr. Wynaendts, how would you describe Aegon's performance in the second quarter?
The second quarter was again a very strong quarter. It was a strong quarter in terms of underlying earnings, up 5%, a strong quarter in terms of sales. We see continued progress with sales up 21% this quarter. It was a strong quarter in terms of capital position. We show again a strong capital position in each of our businesses, but also in terms of excess capital at the holding. And finally, I'm pleased to report that we will announce an increase of our interim dividend to 11 cents, which I think is clearly showing that the strategy which we have put in place is showing the positive results.
Net income is affected once again by hedging. Could you explain what happened there?
Yeah. Very similar to the first quarter. What you see when the financial markets do rise very quickly and steeply, equity markets have been very strong. Interest rates have increased also significantly in the second quarter. What you see then is that the hedges produce a loss. However, these hedges are in place because we intend to protect our capital position. It's very consistent with our strategy of having a strong capital base, but also to protect our capital base. And in order to protect our capital base, we need to put in place hedges. And I think the best way of seeing the results of this is that we are able to pay an increased interim dividend.
And sales were very strong in the quarter too. Do you expect that to continue through the rest of the year?
Well, what we see is the momentum is building up, but it's also continuing. And I believe it's a result of the efforts we've been making in the past of focusing more on our customers, on expanding our distribution. In particular, in the second quarter, we have announced a number of new distribution agreements. With distribution agreements in the US with Edward Jones and Voya, but also in the UK, where we have a distribution agreement with Mercer to be one of the three providers for the pension products. These are all steps which are contributing to a continuation of the positive momentum which we're seeing, and one we really are very pleased with.
You talked about customers there. How does that show in terms of demand for your products?
What is very clear is that we see that in all the areas where we're focusing on, there's more demand for our products. Not surprising to us. People get older, people need to save more for their retirement. There's a longer period for retirement. In other words, you have there to take more measures. In an uncertain world, our customers are looking for protection. They want to be safeguarded against fluctuations in the market. So all of these elements contribute very strongly to an increased demand of our products. And that's why we are focusing on specific areas. We've been very clear about it, helping customers securing financial futures, protecting them, but also allowing them to save for retirement. It's the core and the heart of our business, and that's all we're doing and focusing on.
And looking to the future, Mr. Wynaendts, what are your expectations for the economic environment, for the developments there?
Well, what we see in the United States is a clear improvement. You see that in the financial markets, you see that in our business, and our business again performed strongly in the US. In Europe, it seems that it will take longer. A lot of structural measures still are to be taken, and I believe you'll see more volatility. And that is also why we are really focusing on our strategy, which is one of having a very strong capital position. In this uncertain environment, it is an absolute must and not a luxury. I also believe that in this environment we're well positioned, as witnessed by our figures in the second quarter, with strong growth in underlying earnings and our sales and maintaining a strong capital position.